Yo,
We live.
he's live.
Oh shit! Go through and send them to everybody.
Yeah.
What up, Ezon, Danny? See y'all in here early. Let me send out these DMs to everybody so they can tune in. Tune in live.
Yo, how's everybody doing? What's up, the Boundra? How you doing, Bennett? What's up, my guy? Let me hit people up. Let me hit them up.
With Fabio. All right, successfully sent. Wait a minute for some people to tap in. But yeah, just because that's off the side, off script a little bit. I think I started off with that story.
Mm-hmm.
Let people know the type of catastrophe they can avoid. What up, AB? Ant, live in the building. A winner. Our first winner. I'm repping that Sonics championship sweater. Y'all don't got this. Quick stunt. For real, let's get another. Bring them back.
Bring him back. I swear, that's literally why I don't have a favorite team in the NBA, because we don't have a team. Like, I swear. I can't do it. I can't. I want to attach to OKC. Nope. I want to attach
to... what up? JoJo, what's good?
The dude, JoJo.
EBE, shout out. Y'all tap in.
D-Mad, what it do, man? You know what I'm saying? You already know. I mean, you had the little squabble earlier today.
Did you guys?
Yeah, it was something slight. You know what I'm saying? He know.
Yeah. All right.
Look, see you laughing
a little bit. We're getting up there a little bit in our numbers. You want to get it going?
Yeah, go ahead. Yeah, let's get it going.
All right. We're going to start it off again. Let everybody know. Welcome to Square Knowledge. This is a Market Monday review. We are not financial advisors or CPAs. This is entertainment purpose only. Do your own research. Trading and investing has considerable risk. So please do your own research. We are not financial advisors, again, or CPAs. So yeah, we're going to give you guys the Market Monday review like we have been for the last 6 weeks. This is week number 7 for us. Before we get to that, I got a quick side story. We're going to try to keep it shorter again this week. Last week, we tried to keep it short. Ended up didn't work. But it's all right. We got another chance this week. But real quick, before we get to the Market Monday review, I want to give a quick story. I've been reading this book called Bitcoin Billionaires. It's about the Winklevoss twins. If you don't know who the Winklevoss twins are, they're the twins that Mark Zuckerberg basically stole the Facebook idea from them.
Allegedly. Did he get caught with it? Yeah, I know
he settled out of court. Settled out of court. They had a different idea, and he took it, and he did his thing with it, and he got over on him for sure. But so basically, I go to the doctor earlier. I'm saying this because I go to the doctor earlier, and I have this book in my hand, and one of the nurses sees it, and he's like, "Oh, you're into Bitcoin and stuff." I'm like, "Oh yeah, it's honestly just about the Winklevoss twins." And basically, why I'm telling this is because he told me he had a friend who invested in Dogecoin years ago, and his friend, he did it on some old website he has no clue about, an old phone that he doesn't have anymore. But now that the investment that he made into Dogecoin is worth $12 million now today.
$12 million.
$12 million. Millie. But he's locked out of it. He cannot get to his 12 million. He has no access to it because the old website that he did it on, it's either gone or he just straight up doesn't remember it. But I think it's gone because his friend, the nurse, told me that he did everything in his power to get it and he can't get it. So he's asked out of $12 million. So the moral of the story is to protect your assets, especially your crypto. Crypto is a dirty game. And you don't know, you can't trust the people, the owners of these websites. Who knows what kind of sanctions they could have tomorrow or next month that shut down their website completely. And if you don't have your crypto secure, you're asked out. This dude is asked out at $12 million. So
$12 million.
Nano Ledger is a great way to secure your crypto. It's a physical wallet. So no matter what happens to any platform you're using for your crypto, that ledger you'll be secure. Right. So,
and then be careful with the Coinbase as well, So be careful.
Honestly, you got to be careful with all of them.
Right. So that was just a little story tell for you guys, show and tell story tell, just to give you guys the concept of you can make a lot of money, you can do the right thing, you can be in the right position at the right time, but then it can be gone in a second just because. You know what I'm saying? You didn't protect your money. So definitely protect your money. Make sure it's a reliable resource, a reliable platform that that you trust, and because $12 million.
Yeah.
Oh, I'd be hurt right now.
Yeah, it'd be sad. So yeah, man. All right, let's get to it. We're gonna go over Facebook. Has been huge in the news lately. We're gonna go over that. What's up with them? So yeah, let's start with it. Facebook didn't hit its earnings report, and after that happened, I'm gonna go pull up their chart real quick. They had the biggest one-day drop ever, if I'm not mistaken, of 200 billion, and that's with a B, not million. B. 200 billion, the biggest drop ever. They have a negative growth rate for the first time in 18 years. Which we'll actually get to where Apple plays into this, but they lost 200 billion. Meta, the metaverse platform that they're growing
Web3
there. What's good, Jeezy? I see you, boy.
Castro.
That lost 10 billion.
I think it's continuously like 10 billion a day, or what were they saying? Or they're saying that was a continuous thing, that it just keeps on losing right now. But it's new.
They're trending down for sure.
Yeah.
So one of the reasons is a lot of these other tech companies and also hedge fund managers and really, quite frankly, the government. They don't fuck with Facebook. They don't like Mark Zuckerberg. Mark Zuckerberg he's been known to be a shiesty guy.
Yeah, he's not trustworthy anymore, and then it's starting to show, and so people are starting to basically renege on what they had with him or relationships with him. So it's not looking good for him.
Exactly. So one of the reasons why this happened to him, it's kind of a coordinated attack. Apple, they have what now is, I have it written down right here. Apple put in a tracking transparency policy. So it basically gives you the right to sign off on it or not. And if you don't sign off on this tracking transparency policy, it's how they get, the ads. They figure out what you're searching, so they know what to advertise to you, right? And if you opt out of that, you, in all reality now, you lose. Facebook loses you as a customer, right? Mm-hmm. And real quick before we go on, we should say that all this is all a highlight reel of the Market Monday episode, brought to you by EYL. So Troy, Rashad, and Ian, this is our highlight reel of these guys. This is all their information that we're running over. So yeah. So Apple has a coordinated attack. They put out this policy that basically it gives you the right to say yes or say no. And if you say no, you're no longer a customer for Facebook.
Right.
Facebook.
So to basically sum that up, to give you guys perspective. So basically, Facebook is all about ad space, right? They before with Google.com and all that stuff, they switched. Being on the browser, they switched to the app game, right? They were like one of the first.
Yeah.
But then the only way to control an app or to use an app is on a phone, an Apple phone, an Android phone. So they technically have control of the app game, even though Facebook runs their whole marketing or their whole business off of the apps, right? So to advertise that, they need Apple, they need Android, they need all these big players to control, to run that, right? But now Apple is blocking, or they blocked, or like what my guy Trey said, is they created this new thing to where us consumers are now allowed to make the choice of blocking the ad, or blocking ourselves from the ad, or whatever it may be. Yeah. So now Facebook is losing their main marketing tool because they don't have control of the app. Yeah. So that was kind of the main thing they were talking about. So they're like basically getting it's like a $24 billion hit right now that they're getting hit with just off of this move that Apple made. Yeah.
And so also they threatened to not let Europe use Instagram or Facebook because of their governments trying to restrict policies and monitor. So these are all things that are happening. That is why Facebook take the biggest down gap, in history. Like we said, 200 billion that they lost in one day, overnight. Like, it's astonishing. So yeah, Ian is extremely bearish on Meta, Facebook, and we have a few reasons why. He gives his top reasons why. I just want to make sure I didn't miss any other little part here. So yeah, we'll get into 10 reasons why he thinks Facebook might be a little more than 10. Don't quote me on the exact number. But oh yeah, it was 10. But you said it was Meta took a 10 billion loss, and also the Oculus took a $10 billion loss.
Okay.
Yeah. So the main reason why,
and the reason for that is because, one, how many people have an Oculus? Because I know I don't have one. Do you got one?
No.
That, and then the people that do have one, how many times do you use it a month? Yeah. So again, the whole thing of advertising this and that, if you're not on it, how do you catch the advertisement, or how do you catch what's going on, or whatever that they want to show you, right? If you're barely using it, so that's the kind of the main reason why it's going down. It's on the negative trajectory right now.
Yeah. Yep. So yeah, not looking good for them. So yeah, a couple of reasons why. I'll name a couple here. They're getting blocked by the government. The government is going to block like any major acquisitions that they want to do. They're going to get blocked. They have a negative net user. Negative. Their user growth is now negative. People aren't. It's not going up as far as the amount of people who are using Facebook. It's trending down. Like we said, Apple blocked them with the ads. They have an inferior product. What else is there? What? No.
We said it earlier. Not the trust. The CEO is not liked anymore.
Yeah, he's been pulled up to like Congress plenty of times, and they're just they don't, for whatever reason. Like I said, I just started reading this book, so it's actually giving me a little more knowledge into it. But he's just known as a not trustworthy person, and he even laughs about when making Facebook about how millions and billions of people trust him with their emails and their passwords and all this stuff that he can easily hack, So he's made a lot of enemies,
Yeah.
I guess they had a chance for a phone back in like 2009, 2011. They didn't.
Yeah.
They didn't
Ian
move on that.
Yep. Ian said they never partnered with any hardware because, again, they're all about advertisement and apps, right? And what you need a hardware. And there was that one sweet spot where, Trey said, 2009, 2011, where they had the power of all be to where they can kind of do whatever they wanted. So if they wanted to partner up with Apple, or any major hardware phone or type of phone that they could have at that time, but they passed on it because either Zuckerberg, how he is, or whatever his situation was at the time, to where so they missed the opportunity. So now they're still in the space to where they're still not in control of their destiny, and that's what it is showing.
Yeah. What's up, babe? Thanks for joining. But yeah, so because of that, they don't have any hardware, they have an inferior product, and because they didn't move in on a phone when they could have, their competitors own the device.
Yep.
So Apple owns the iPhone, obviously. Whoever owns Android, Facebook doesn't own these things. So now these people who own the iPhones, who own the devices, can push Facebook out of it because Facebook needs them. Instagram runs on an iPhone, on an app. So if Apple wants to play dirty and push them out, they can, and that's what they're doing.
Same with the government. Same with everyone else that dislikes the CEO right now. Yeah.
So, and like we said, Apple gave users their choice, not to share info. And if you're not sharing your info, then that destroys Facebook. So, yeah, it's who was it? It wasn't Troy. Rashad. He gave the example of Meta's. It's obviously still worth a lot of money. They're still one of the biggest companies. But he gave the example of Mount Everest as you make it to the top of Mount Everest and you go 200 feet down or a mile down or so, you're still higher up than anybody else. But you're on the come down.
Yep.
So that's the main reason why Ian is actually bullish on it. He doesn't see any more. He just doesn't see much more potential. It's on the come down. So yeah, it's well, what was I about to say? Damn, I lost it. Oh yeah. So since on the come down, it had this major gap. It gapped like penny stocks gap. That's what Ian was saying.
Yeah.
Like for it and for those who don't know, a gap is when a price is at on a chart. Say it's at $50 here, but in one day it gapped way down to $25. That's considered a gap because if you look at the chart, there'll be a huge gap from where the price was to where the price is now. And stocks can either gap down or they can gap up. But the fact that it gapped down as much as it did, it's not common for a company that is this well solidified to gap down like this. It's more common for penny stock companies to gap down like this. So it's not a good sign. So yeah, Rashad was saying Instagram. So Facebook and Meta took their dives, but Instagram still has its upward trend, right? And that's the one thing that Facebook is still kind of holding on to. And Rashad was saying people in their late 20s, 30s, and 40s, he thinks will stay on Instagram, which gives, because Instagram, we all know Instagram was like the first one, it's really solidified in the culture,
Yeah.
Everybody. Yeah. Everybody, wakes up, gets on Instagram, checks Instagram. A lot of people are checking Instagram before they're even getting out of bed, let alone flossing or brushing their teeth. So Rashad, he still thinks.
What up, boo?
He still thinks that they have something in Instagram, but at the same time, Instagram is with TikTok coming out and stuff too. They're dividing a split with the younger generation, moving more towards TikTok, but there's still no decline on Instagram. So yeah, I mean, we kind of would like to know y'all info or input too on what you guys think as far as TikTok and Instagram, what you like more, or
what do you use more?
Or what do you use more exactly?
My guy Mo, what up, Mo?
So
appreciate you stopping by, my guy.
Yeah. Oh, and another good example they gave was how we all know how 50 Cent gets the credit for taking out Murder Inc., right? And Ja Rule and all them, which, you know, he started that stuff. But what a lot of people don't know is that Murder Inc. got hit with a bunch of Fed charges, you know? So the government came after Murder Inc., which really brought him down. And if this is the same thing that's happening with Facebook, with the government getting involved and stopping them from any large acquisitions, in Ian's word, how Microsoft acquired Activision, he's saying that
it's gonna be the last of it.
Yeah, that they'll never let that happen with Facebook. So if government's getting involved with blocking things, you know, he still has a 2-year projection of it going like $80 more up, so like the 302. It's at 220 right now. But like we said, you may be higher than everybody else, but if you're on the other side of the mountain coming down, how much longer are you going to be higher than everybody else?
Right.
So, me personally, I'm not going to mess with it. I don't really see my portfolio's full right now, so
there's other stocks you can play with than trying to mess with the whole dips in bullish market and bull market of Facebook, just because of what other CEO and where it's projected and what's going on with it, with the news and the constant negative battle that they're going to have to go through. You might as well stay away. But that's just our opinion. Do your thing. Do your research.
Yeah. Ian says it's dead. Troy and Rashad, they're saying it's not dead. Not yet.
So it's a split decision right now.
Yeah. So yeah, that wraps up the news on Facebook. Like we said, biggest drop, biggest gap down in history. 200 billion it lost one day. Amazing. Competitors are starting to corner them, basically put their backs against the wall. It's the main reason why it's happening a lot. They got a lot of enemies. They've absorbed a lot of competition. Snapchat came out. They took the Snapchat stories. Before that, it was Vine with the videos. They got rid of Vine. It was like, okay, we'll have videos now.
And they did the same thing to TikTok, but TikTok is here to stay. So like that's why, you know, we have on Instagram, we have Reels. So they made their own version of it. Yeah. But TikTok is obviously here to stay. So they're able to battle with them. But, you know, Instagram is just, you know, that's what we all started with. I mean, obviously we started with, you know, Facebook and all that stuff too. But, you know, Instagram is definitely a beast in the game of a staple of what we use and how we use it. So it ain't going nowhere anytime soon.
Yeah. All right. So now we're gonna move on to which me and you have talked a lot about, which is index funds versus mutual funds versus ETFs. A lot of people don't know the difference on what these are. So we're here to now break them down a little bit for you guys. The guys on Market Monday, Troy, Rashad, and Ian broke it down pretty well. So we're gonna relay that message to you guys, and let's let you know. So the first one, I'll hit them. You want me? I'll do the mutual fund.
Yeah, go ahead.
So a mutual fund is managed. It's a fund of stocks that's managed by a company. A company like, for example, would be Fidelity. You know, it's managed by that company who has like a fund manager or a team of fund managers who create this fund for you to invest in. And now the knock on mutual funds is their fees. They have like sale charges, annual fees, and every fund has its own different fees. But that's the knock on mutual funds is the fees for even holding it every year, or the fees for buying, the fees for selling. You know, so yeah.
But it's spread across the sectors, though. So you're in the technology, you're in the health, you're in
whatever
all sectors. So it's a safe bet. You know, it's a mutual, like you said, it's a mutual fund. It's a slow rising type of gain. But again, like you said, it's, you know, someone's doing all the work for you, and that's where the company comes, like Fidelity or like your 401ks or kind of are mutual funds. So that's kind of what, you know, they're doing for you, right? You put the percentage in. You know, your company matches, and then they disperse it into the mutual fund. To, you know, a little bit goes in tech, a little bit goes in health, depending on that company's, you know, playbook. If you know, in other words.
Yeah.
And then the next one is index funds. And index funds is similar, but instead of it being a wide range, it's like the analogy they had in the Monday market updates was buying the whole grocery store, right? So where you're buying milk, you're buying eggs, so you're still in every sector. But you're buying only a few stocks here and there from every sector, and then what they're doing, and so whatever that index fund that they're in is they're piling up, however many stocks they want, or stocks or companies, and they're putting them together, and then they're basically, so it's still a safe play. It just doesn't have all the managing companies on side of it, so it's not as active as the mutual fund would be, because they're fixing it, changing it up, making sure it's on a trajectory, right? But an index fund is still pretty much a safe play, because again, you're in multiple sectors to where, like for example, the example they use is Facebook went down 25%, but if you're in the index fund, you might only went down 3%. So it kind of helps you. But on the other side of that, if Facebook goes up 50%, you might only go up 10%. So it's the same thing to where but it's just a safe play, right? But it's not as actively managed as what they said.
Yeah. Yep. So and then ETF is, and the ETF can kind of go both ways, but what they were talking about was an ETF is in both the mutual fund and index, or mutual fund. I already talked about that. How it's actively managed. So the ETF is like getting an aisle in a grocery store. So like the tech sector, right? It's QQQ. There's a few different ETFs for a tech sector, but one tech sector ETF is the NASDAQ, which is QQQ. And that's basically going to the grocery store, going to the stock market grocery store, and you're going to the technology sector, and you're getting that aisle, you're getting those tech companies. Mm-hmm. So, and that's where like your example goes in. You're going to have all of them, including Facebook. So if Facebook goes up, goes down, you're going to go up or go down, but not as much.
Yeah.
But there's other ETFs. There's other like tech ETFs, and there's other ETFs that go to specific sectors in the market, which makes them an aisle in the market grocery store. Mm-hmm.
So the index has the whole store. The ETF is going to narrow that down and give you the best or what they want in that one aisle. The frozen section. You know what I'm saying? Yeah. They're getting your frozen pizzas and your frozen pastas for you. Yeah. You know what I'm saying? So
253Z. Joe in the house. What up? But yeah, but also I want to touch on with the ETFs, because these index funds also have ETFs. Like the S&P 500 is an index fund, right? But the S&P 500 also has an ETF. And to my best of knowledge, that ETF for the index fund makes that index fund tradable on the market every day. You can buy and sell it however many times you want. If you buy an index fund or a mutual fund, you can't just trade it on the stock market like you can in Robinhood or your Fidelity account. You have to buy and sell them in different transactions. How exactly, I don't know, because I haven't bought them directly through, say, Vanguard or any mutual fund management company, right? So Fidelity or whatever. Tui, what up, Tui? The smoking Samoan. What up, bro? But yeah, so the ETFs for these index funds makes those index funds tradable. So if you get an ETF that's for the S&P 500, you're still getting that whole grocery store.
Yeah.
It's just making it so it's tradable. So you can buy it at 10 in the morning and you can sell it at 12 noon if you want. You can't do that with an index fund or a mutual fund. So the ETF makes it tradable.
Yeah. More notes. But what Ian, the investment guru of the three, he always mentions.
What up, Tuffy?
He mentioned stick to the top 5 and top 5 stocks and invest in those only. That's your best bet.
Outside of indexes.
Yeah, outside of indexes. That's been his model since day one. So I just wanted to Reiterate that.
He was saying once you get to the 15 to the 40 range, that's when it gets more risky. So,
Yep.
Yeah. Know what you're gambling with. Yeah, then they touched on the Joe Rogan stuff, and that this was basically for like the business people. You know, they touched on the Joe Rogan controversy that he's in the news for. If you guys don't know, we're not going to go over it. Look it up. I'm sure most of you guys know. But a couple of things that they said, just as lessons for people who are, you know, entrepreneurs wanting to start their business, is be mindful of what you say, careful who you attack, and
Mm-hmm.
Yeah. Mindful of what you say and careful who you attack, you know, because, you know, these clips that they're bringing up with Joe Rogan are from years ago. But, you know, a guy in his position, you'd think probably should have been a little more aware of what he was saying and how he didn't know that he'd be the target of attack like he is right now, the smear campaign they're trying to do. But, you know, when you say certain things and it's recorded, it will and can be used.
It's never erased.
Yeah,
just because you delete it don't mean it's gone forever. It's still in the cloud somewhere.
Yeah. So.
Or someone recorded it or saved it, you know, to save it for a later day.
Yeah. Oh, yeah. Just be careful with what you say, what you put on wax.
Mm-hmm.
As these rappers will say, "What up, Tyron? I see you. You finally made it, boy, huh?" So yeah, mindful of what you're saying. Also, careful who you attack. If you're up on the latest news and stuff of what he's been talking about, you know, he's shining a light on things that the establishment doesn't want lights being shined on.
Mm-hmm.
And you know, if you're going against the establishment, you're going against some heavy hitters who can do this smear campaign. You know, that they're on right now. So
yeah, one of the analogies that they had real quick was you know, these, you know, with, you know, the hip hop culture, you know, diss records compared to, like, you know, he said there's only a few out of the 1,000 diss records that have been out there, 1,000, you know, diss albums or songs, like, you only can think of 3 or 4, like, you know, the Tupac Hit 'Em Up or the Nas Ether. Those have only been hits, but the ratio of that is very high, very volatile, right? To where, you know what I'm saying, we can think of maybe 4 of them, but there's been like 300,000 of them. So it's, you know, the risk to reward is super, super high. So you do not want to, you know, just being, you know, trying to attack people or being on the bad side is not always a good thing. So be careful what you say, like you said, and then be careful who you attack. So, and be, you know, and just be ready because they're coming back at you, you know?
Yeah. Just using controversy to make money, it can be dangerous.
Exactly.
Especially if you're just starting out, you know. Those guys made it clear that when they first started out, they made sure to steer away from any controversy, especially being, you know, young black entrepreneurs that, you know, you got to cement yourself first. Luckily, you know, Joe's cemented, so I think he'll be fine. So moving on from that.
Moving on.
We're going to talk about some splits. If you guys don't know what a stock split is, it's when a company announces a split. It's like a company like Google did back in, what was it, in the summer or something?
Mm-hmm.
They announced a 20-to-1 split, which means if you owned one stock at whatever, say $100, you're now having that $100 stock divided into 20 stocks for however much 100 divided by 20 is. So now you don't just have that one stock for $100. You now have 20 stocks that equal up to $100, right?
Mm-hmm.
So yeah, Google did that. Do you want to talk about how that can be beneficial?
So the way I interpret it is, you know, the example they used was kind of like what he just said. So, like, what's the difference from a $5 bill versus 5 $1 bills, right? So that would be the split. The 5 $1 bills would be the split, right? So you had a $5 share or $5 bill, and then we split it to 5 $1 bills, right? And the way I interpret it, and I could be, you know what I'm saying, I'm gonna do a little bit more research because I want to make sure I'm right. But obviously, right? At that point, yeah, they're the same value, right? $5 bill and $1 bill, $1 bills the same value. But once those go up, so let's say it goes up $1, right? So that $5 bill just went up to $6. But then the five $1 bills, each dollar went up $1, right? So they went up to $2. So that means you went to $6 on one end, but then the split gave you $10 because 2 times 5 is 10, right? So now you got $10 on the split. So just splits are splits could be a good thing, right? So what I'm saying, they're not a bad thing. It allows, and then on the other side of it, allows people to get in. So for example, they were talking about how like Amazon, Google, they're at these $2,000 for a share, which is not attractive to consumers, right? Or even retailers,
Retail investors.
Yeah, even the big dogs are like, I'm not, I'm saying that's a lot of money just to get one share, right? So they do this split to where now it goes back down to $120. So now everyone can play the game again and start investing back into it, right? So that's kind of, go ahead.
No, I was just saying that they put it back on sale, basically.
Yeah, so they put it back on sale, right? Put it back on the on stock, right? To where everyone can buy in again. So that's kind of what a split is. In short, don't quote me on everything. I'm still doing my research as well on it. That's how I interpret it. And yeah, so I think
that's definitely what a split is. That's fact. A split is it goes from a one $5 stock into one $5 share into 5 $1 shares.
Yeah,
that's definitely what a split is. So, but yeah, after the split too is usually like a pullback. And Ian was saying people always ask, should you buy before or after the split? And his answer is to do both. So yeah, if you hear about a company doing a split, check out their chart, check out the technical, see what's happening. It could be a good time to get in if you haven't already gotten in. And this was in the news currently because Amazon is now the last major tech company that hasn't had a split. I think their shares are like, I don't want to say nothing too crazy, but it's pretty wild, isn't it?
Pretty high, pretty wild, yeah.
I think it's over $3,000 for one share. So since they're the last ones to have not done a split, Google did a split a few months back. There's rumors about now Amazon doing a split. So it could be. I mean, Amazon is a lifetime stock anyway. So if you got in now or waited, it's gonna be beneficial. Like I said, it's a lifetime stock. It's something you want to hold on to. But if you got on now, there's a good chance. I mean, they can't. You would think they're not just going to keep letting it run up to be $5,000 a share, $10,000 a share. You would think, especially since companies like Apple have split multiple times, and Amazon hasn't even done it once. You would think they're going to at least do it once. So who knows? They could be a 20-to-1 split too, a 30-to-1 split. Who knows? Their price, like I said, is over $3,000. So Amazon is in the rumors for a split. And Amazon and Google, I'm sorry, two of the best ever, as long as Apple as well as. But yeah. So yeah, be on the lookout for a potential Amazon split. And then here to wrap them up, looks like we might be able to go on time a little bit here. Was just some big mistakes that people do in the market. I have a tip too. I'll let you want to do that. You want to do that tip after the mistakes.
Yep.
So a couple of the mistakes are casting too big of a net, too many opinions, and too many businesses. Now, I'll start with too many opinions. It's kind of something that I've had to narrow down with just recently over the past couple of months, because when you're listening to too many different people, too many different perspectives, too many point of views, it can pull you in a lot of different directions, and you can not be sure of what to invest in, and now you're just sitting on your palms not doing anything. So I've made a conscious effort to invest my knowledge heavily into the guys at EYL and the Market Monday, and go strictly with what they're putting out,
And why we talk about them so much.
Yeah, exactly. So I'm trying not to go too broad on who I'm listening to, I'm trying to stay focused on one lane with what these guys are talking about, and basically test it out, see if it works. if something doesn't work, you can always shift your path, right? So yeah, just be narrow with who you're listening to, who you're getting your information from, and you know, because if you don't and you're pulled in a whole bunch of different directions, it's going to be hard to invest. You know, it's gonna be hard to make any decisions, and you'll be stuck sitting on your palms and see a bunch of opportunities passing you by. So yeah, casting too big of a net too, like we said. That kind of goes the same way with who you're listening to. If you're investing in the 15, 20 stocks, it's going to be a lot harder to be successful. Stick with your core 4, maybe 6, and you have a lot greater chance of being successful, especially if you're working with the top companies, you know. So yeah, and the last one, too many businesses, was we went over streams of revenue, right, a few episodes ago, and you know, you can have a lot of different streams of revenue in your one business. You don't have to start a clothing business and a car business. Yeah, you don't have to start all these different businesses in all these different lanes. You can create your one business and have a bunch of different revenue streams from that one business. So yeah, don't spread yourself too thin, or your investments too thin. Mm-hmm. So yeah. Oh yeah, you want to hit that tip?
Yeah, the Friday one.
Yeah.
Okay. Yeah. So the last thing we got, little tip that they talked about was, to kind of compare, your stocks and kind of compare what the market is doing. Is at the end of every Friday, write down what the week ended at, either higher or lower. So those index we're talking about, the SP 500. The Nasdaq, whatever your that you kind of guide yourself off of, because those are obviously going to have the most important stocks or companies inside of them. So you compare that every Friday from the last year, right? In the year from
What's up, Allie?
So if you keep track every Friday, see where the market ended at, see where the top 5 stocks, you can kind of play the game how you want, but make sure you use those indexes and then compare it. You know what I'm saying? Kind of see what it did last year. So one example was, which is I've never done. I'm actually going to start doing that. That was definitely a good tip for me myself. Where supposedly if you looked last Friday, it was the same as a year ago. So people were panicking and this and that, but there was no need to, because if you have been tracking it and understanding what the market's been doing, it's been doing the same thing. They say one thing that funds or big companies buy really heavily at the end of March. It's just a kind of a trend that happens, and then February a lot of stuff starts to trend downwards. So it's just a lot of so the market definitely is going to talk to you. You just got to read between the lines and read the lines. So that's just another one tip that you can, the way to kind of compare and contrast of the years before and the year to come. And yeah.
So yeah, with those 3 indexes that you guys can track are VTI, the Vanguard Total Stock Market Index, the S&P 500, which is SPY or VOO, they're the same thing, and also the Dow Jones Industry Average, which is DIA. And so all of these 3 indexes are the market. So however these indexes are trending is what the market is doing. Yep. So at the end, like you said, at the end of the week, you can look at these charts and see, did it end down, did it end negative, or did it end positive, and chart it, mark it down for data. And once you do it for long enough, you'll be able to have some good data to go back on to see what the market is going to do. But yeah,
by monthly, by year, I'm saying, you'll be able to track how the market's doing.
Yeah, exactly. So, but yeah, those three ticker symbols are ways you can track the market as a whole, instead of just tracking like a single stock. To track the market, to see what the market is doing, VTI, SPY, and DIA. Those are the market indicators. So yeah, keep those, check them out. Yeah, I think that basically about wraps up our episode. Our first time doing it in 45 minutes flat. Not bad.
Yeah. So if you guys have any questions, man, hit us up. We would love to, do some research with you guys. You know what I'm saying? If you guys have any questions on the stock or a tip that we've brought to you guys, let us know, because it's all about square knowledge. It's all about helping each other. So hit us up. Let us know how we're doing. Let us know if you guys want us to talk about some other stuff. You know what I'm saying? We're definitely willing to look into that and then kind of, run this thing together, man. So, this all to help each other, talk about each other, talk about stocks, talk about investments, so we all can better ourselves and generations to come, right? So yeah, man, appreciate you guys tapping in with us.
Oh, hold on real quick. I forgot this one real quick. They talked about investing in your life insurance. I don't know if anyone has life insurance, but there's ways you can invest in the stock market and life insurance. I don't know anything about it. I don't have life insurance, but this is what they're called. They're called VUL and IUL. VUL is variable universal. What's that? Oh,
I was my fault. Go ahead.
Okay. What up, Gibbs? 33. I see you. Chaz, tapping in. But yeah, so variable universal life insurance. That in that life insurance, I guess you can invest in certain stocks or whatever. And also IUL is the index universal life insurance, which you can invest in indexes in that one. So and that one, which I thought was cool, actually, he said with those you have a 0% minimum and a 12% max. So if whatever you invest in goes down, say 5%, you're stopped. You won't go negative 5%. You'll only go to 0%. But if it goes up to 15%, you're capped at 12%. You won't go over 12%. So yeah, just something real quick. Anyone has life insurance, you can ask your life insurance agent about that, VUL and IUL, and maybe it'll do something for you.
Yeah.
Yep. So that wraps up another episode of Square Knowledge Market Monday Review. We thank y'all for tapping in. You know what it is.
Hot gang.
We out.
Back, man. We coming back. For all you guys that down right now, we coming back. Watch. Yeah, Chaz, I'm talking to you.
Yes, sir. All right, man. We live and now we out.
We out. Y'all have a good one.
All right.
All right, brother.
Peace.